It's all like you're talking about. It's about setting up the right, having the good financial plan, having those reserves, having capital set aside for the unexpected, or the expected when you're starting something new and you know there's not going to be revenue coming in. But going back to this profit first methodology, how does someone set this up? What does it look like? You know, how do they do it the right way?
So in the book, Mike talks about 5 bank accounts. The first bank account is your revenue account. So all your money comes into one bank account, and it's a clean bank account of just revenue. The reason that's nice is because when you go to look at it, you know actually how much revenue came in. If you have a big pot of money with all your different accounts or all your different things going on, it's very difficult to tell how much money came in and how much money went out.
Hmm.
So by having this revenue account, you know this is how much money came in. And on a set schedule, we basically empty the account. So some businesses do it once a month, some businesses do it twice a month. We recommend no more often than once a week. So those are your 3 choices, right? That you should
Hmm.
probably work within. Now, for a business that only gets a big check once in a while, then just do it every time you get a big check once in a while. That's fine. Once you get the money in, then based on set percentages, we move it to the other 4 bank accounts. So the first of those is profit because you should take your profit first. The second is owner's pay. The third is the tax account. And then the fourth and the final account is the operating account. And so based on percentages, you move it to all of those bank accounts. Now, things have gotten easier. There's a company out there called Relay Fi, and Relay basically does your banking operations for you, and they'll automatically move your money to where it belongs for you. So you don't even have to think about it. They do it based on the rules you set. And so money comes in, it goes where it belongs, and now you know what the money's for. Only use the money for what it's supposed to be used for. Don't use it for anything else. And for the most part, life is good. What happens, though, for most people is they they overspend. And so the money in that particular account runs out, especially the operating account. And then they're like, now what? Well, now it's time to get resourceful. Now it's time to realize your business just said you're spending too much money. So don't solve it by spending more money. Solve it by figuring out what needs to change or where you've got money leaks and go fix the system and do something about it. So it might be a sales problem. It might be a pricing problem. It might be a too much overhead problem. It might be that you're growing too fast and the money is not keeping up with the growth. And that happens a lot. People don't realize that growth is a reason for failure. So all of these different things happen, and it's going to show you here's where you're at the moment. What are you going to do about it? And as long as you can stick to the rules, life is good. It's the problem is too often people steal from themselves. They don't follow the system. They give up. You know, it's like going to the gym. You don't go to the gym for one day and come out a power lifter. You got to keep showing up and doing the reps and sets, and then you will see the results over time. And that's basically what you got to do. Show up day after day and put the time and effort in.
Explain for me, though, the difference between profit and the owner's what was it? Owner's compensation. If you're a solo, uh, sole proprietor, or if your wife and husband and wife duo, isn't it the same thing?
It's a little bit different. And the purpose of the profit account is also a little bit different. So, first of all, if you If you invested in a business, would you expect to get a return on that investment?
Of course.
So that's profit. Just because it's your business doesn't mean you don't expect to get a return. Your owner's pay account should be what you pay yourself as a reasonable salary for the work you do. The profit account is your profit for actually owning that business. And so that's kind of the separation. The other thing is we don't take all the profit out of the business. We leave some of it there so that creates your reserve account. So that if you hit a hiccup or a downturn, you have excess cash in the business that is available to you in an emergency. And so that's the other thing the profit account does is it gives you a cash buffer. It gives you your emergency fund so that it's there in those situations. But basically, profit is to pay you for starting the company and putting the capital in. Your owner's pay is the reasonable salary you should get paid for the work you do for the business.